Hi, Tim Bigham back again this week for Traders Exclusive, and we just had Mr. Draghi come out this morning with the ECB rate decision, or non-decision in this case, basically leaving rates unchanged, jawboning that they will do whatever it takes to make sure that things don't get worse, although the economic numbers continue to deteriorate, not only in Europe, but bleeding through a little bit here. We're seeing kind of yin and yang in the U.S., certainly GDP being downwardly revised, earnings estimates for next quarter already being lowered. And if you look out in time for 2016, you're looking, Goldman came out looking for about $132 on S&P 500 earnings, putting a 15 times multiple on that, which is kind of a mid-range multiple. We're looking at, about a 1950 S&P in 2 years. We're at, 2015 right now. So given the fact that stocks have become a little bit pricey, albeit everyone compares them to zero interest rates, it is getting a little bit stretched here given the rally in my opinion. So I'm just outright buying some puts that expire next week on the SPY, right at the money puts. Vol has come down, although not pervasively cheap. Last time we saw the market screaming to new highs with the VIX not confirming at this level with October 2007. We all know what kind of followed after that. Certainly, I think a pullback here of some magnitude may be warranted. And then taking a look at Alibaba, which I think just bears, kind of a good market commentary on valuation versus kind of the free money. And that's really what we're looking at here. Although growth is slowing dramatically, stocks keep climbing higher simply because of the stimulus out of Japan, now jawboning out of Europe, even though the U.S. has ended here. And if you look at a stock like Alibaba, Deutsche Bank came out this morning with a note with a buy recommendation and a 112 price target. Usually price target corresponds to a year out in time. Alibaba at the time was trading about 109, so they're looking at about 2% upside over the course of a year on Alibaba to hit their price target. No one really, I think, sits back and looks at what is being said. They simply look at the fact that, they have a buy recommendation on it. So do you want to hold Alibaba, for a year and maybe make 2% with all that downside risk? To me, from a introspective sort of look, that implies, maybe some downside here. Alibaba, again, has rallied from 85 in mid-October to 110 yesterday, has a bigger market cap than Walmart, although it only has 2.2% of the sales. So Walmart basically sells about 45 times more than Alibaba, yet Alibaba is worth a lot more. Everyone's looking at the big growth rates. We remember that mantra from the NASDAQ mania days. Cisco can just grow at 50% year over year. We saw what happened there. So a little caution warranted there as well. But when things are going straight up, I think everyone gets blinded. From my contrarian perspective, I'm getting a little bit nervous here again. The Warren Buffett adage, be greedy when everyone is fearful. And in this case, be fearful when everyone is greedy. So I'm nibbling in on some puts here, both on BABA and on the SPY. We'll see if I'm right. It could keep climbing higher. But until next week, this is Tim Bigham. As always, keep those position sizes in place and those stops going. Take care.